three big forces to keep your eye on. And when you see them in their cycle, then it's clear. First, is the country earning more than it's spending and building savings, or is it spending more than it is earning and creating debt? Because one man's debts are another man's assets. And when somebody is holding those assets and they're producing a lot more of that money in debt, they go down in value. Money goes down in value as they produce it to produce that buying power. And then that gets people bad returns. It produces a higher amount of inflation, and it produces bad returns for holding debt or bond. So in other words, cash or bonds. And then people get out of cash and bonds, and that produces rising interest rates while there's rising inflation. And that produces stagflation. So I want them to get the mechanics of that, because that's happening now. This is not controversial. We are producing a lot of debt. We're spending a lot more than we're earning. And as a result, they're printing a lot of money. And the printing of a lot of money creates a lot of inflation. And with that inflation, cash is trash. You don't want to hold cash, and you get out of that, and that causes rates to rise. And that's one of those three factors. So you can see it happening, and you could also see the cycle of it. The second force that is dealing with is the internal conflict force, how you are with each other. Are you operating cohesively, common mission, and moving in the right direction? The system working? Or are you at each other's throats? Is the system threatened? Because history's shown when the causes that people are behind are more important to them than the system is in jeopardy. And that is a risky situation. It's a risky situation because it produces disorder, and it can produce a form of civil war. And at those times, when you have that, you see greater and greater polarity. In politics, it shows up at greater and greater populism of the left and populism of the right. And populists want to fight for their side. They're not moderates. Moderates want to work together to try to find a compromise that's best for the whole. Populists appeal to their crowd by saying, I am fighting for you. And they will fight each other. And that fight can be at the threat of the system. So in history, for example, we saw 4 democracies in the 1930s choose to become dictatorships as one side fights to the other because they become so disorderly. And we have a system right now that you could see that it is possible in elections that neither side might accept losing. And so the system becomes in jeopardy. And you see that the moderates leave the system. You can't be moderate. You have to pick a side and fight. And so you see this in the French Revolution. There were moderates in the early part of it, that recognizing that there were problems and wanting to work together. The moderates got guillotined. The polarity began. The same was true in the Russian Revolution. The same was true in the Chinese Revolution, the Cuban Revolution, and so on. Those polarity gets greater and greater as there's a greater intensity to fight. And that is the internal piece. And so you could see where we are in that internal piece. Right now, we see that moderates are dropping out of choosing not to run for re-election. And you're seeing in the primary system that the fight is who's over most extreme in representing that. And you're seeing this greater polarity. And you see it reflected in many statistics. Something like 10% of the Democrats or 10% of the Republicans, I don't remember, versus 15% wish the members of the other party would die. They don't want them to marry their children. I mean, there is a great polarity, and you're seeing that lead to changes in where people live. They're moving to different areas, not just because of tax reasons, but because of differences in values. So when you have financial problems and you have this kind of polarity and you have a bad time, you have a lot of fighting internally. So imagine where we are in the economic cycle. We're in the part of the economic cycle where the government has given a lot of money and credit to people. They've put it out. Well, no surprise, that's leading to a lot of inflation. Inflation takes buying power away from people. And it also means that then there's going to be higher interest rates, and that's going to squeeze people. And so that makes that wealth gap and that wealth issue more difficult. And the third force is the rise of a great power, the geopolitical force that's going on, that we're seeing today with China and Russia and so on, and how that's changing. Because when the power of a country diminishes, okay, when we get weaker financially, or how we are with each other, and so on, there are greater vulnerabilities. And there's always the competitive power that learns how to become stronger. And competition always happens. There's the establishment, and then there's the new competition. And as they get stronger in all ways, militarily and commercially, and so on. And that's the dynamic that we're seeing. It's the same dynamic. There are two sides, and there'll be neutral countries. Just like in the war, there was the Allies and the Axis powers, and then there would be neutral countries. And so that part is developing. The U.S. conflict part is probably progressing a little bit quicker. On the world order, there is a very close relationship, a common objective of the Russians and the Chinese. So there is a competition in the world, and there's a dominant world power which is perceived as being overly controlling. So the Chinese believe that the policy of containment of the United States, in other words, just right within their borders, that there isn't a region that's suitable for them, in much the same way as the United States. There's always a geographic region that is an area of influence in the area, like the Cuban Missile Crisis. When there's a threatening power in Cuba, we reacted to that. That kind of geopolitics, they believe that the United States is sort of containing them, and they are growing in power. So that there's that dynamic, and Russia has the same kind of view. And so there's a common, let's call it, competitor. And there are 5 types of wars. There's a trade war, there's a technology war, there's a geopolitical influence war, there is a capital war, and then there's a military shooting war. And we are in the first 4 of those wars in this competition. We're not in a shooting war with China. We are in a shooting war of sorts with Russia and the Ukraine. We're providing arms, and so they're shooting. And so there's a military war going on, and we're in it our way. So we're at those particular spots. And the capital war is sanctions. We hear the notion of sanctions, and what that means is they're economic, and the way they work is to shut off, to produce economic pain by either not letting them get at their money or not letting them get to goods that they can import. And these have happened through time. In Japan, that was what set us up for the bombing of Pearl Harbor, because the United States cut off Japan's oil supply, was in the process of doing that, and also confiscated its bonds, much the same way is happening now. And that put them into a corner that led them to bomb Pearl Harbor, and then we went to a military war. So that's where we are now. And that also is risky because it threatens the value of the dollar. Because right now, debt is dollars. Any currency, the way you hold it is you hold it in the form of debt. You don't hold it just in paper. And because there's a rising inflation, and because there's a lot of printing of money, and because there's also a greater fear on a number of countries that they too could be sanctioned, there is a selling of dollar-denominated debt. So you're seeing that the bond market is going down. And so there is that dynamic that's going on. The capital wars are the ones that accelerate immediately before the military wars. Usually the coffers are empty, they're printing a lot of money, and then they're trying to use economics as a weapon. We're in that part of the cycle. Now, in terms of how this will transpire, I think there are 3 big questions that we're going to learn about and get answers to pretty quickly. The first is, does Putin and Russia win or lose? I'll describe win as what he wanted at the outset, which is win for Russia would be to have the Ukraine be some non-threatening position, such as a neutrality, a guaranteed neutrality, and for Russia to have control over eastern provinces, and for Russia not to be economically devastated, instead to be maybe have it something like a 10 or 12% decline in GDP, and for Putin to be in power. If those four things happen, then the cost of his actions will have been worth what was obtained from that. And that would be viewed as a win. It would be then also a loss from the Western countries. The world is looking at the power of American sanctions because American sanctions are the greatest power the United States has. If it was a military power, the world has come to the position that a number of countries have had an equal ability to do harm to the United States militarily as the United States have to do to them. And so we don't have a dominant military power anymore. But we do have a dominant sanctions power because it controls the world's reserve currency. That's a biggest asset. But in weaponizing the dollar, it is leading those to get around and not want to hold dollars because they get worried that they're going to be confiscated. So we will see if that dollar sanctions power, we'll see how powerful it is. If it isn't very powerful, that's going to be a problem. Then you only have military power. I mean, think about this way. If this war is not a difficult war for the United States and Europe for the most important. It produces higher oil prices and the like. But while Russia is throwing in military, we are throwing in sanctions. And these sanctions don't cost lives. It's not a military war. So we're fighting it with sanctions and they're fighting it with military. If you didn't have that, how would you fight this war? It would be a much more difficult situation. And the third thing that we're seeing is how the world is lining up. The world is lining up, which, there are in wars, typically Axis and allied powers. And you could see by the actions that are taken as to which are lining up. Who voted in favor of what at the United Nations? Who is allowing what rules? Who is trading with the other party? Russia actually put out a list who are friendly and adversarial countries. You'll see at the next G20 meeting who will be in favor of Russia attending that meeting and who will be in favor of it not attending. And that's making clear how the sides are lining up. So you're seeing those sides line up, and all sides are in preparation for war. Holding cash and dead assets is a bad thing. So a lot of money is in cash because people think that cash is the safest investment, but they are measuring that in amount of money that they get, nominal returns, and they say it doesn't wiggle much. But think about it. It's lost, as of the most recent statistics, 8.5% over the last, inflation is 8.5%, and they receive virtually no interest rate in cash. And so there was an 8.5% loss of buying power as a result of inflation. And so psychology should change and is in the process of changing to realize that you have to think in terms of buying power, not the number of dollars you have. And you have to think how much is your buying power. And so the worst thing is to be in cash. Like I say, cash is trash. And to be out of the bonds. The next thing is to have a diversified portfolio of assets. Diversification means some assets that are inflation hedge prone. For example, you're better off to own an inflation index bond than a regular bond because their returns are tied to inflation. I think the punchline is, if you take a look at it, it's simple. It's like a regular bond, except its payments are linked to the inflation, so they compensate you for inflation. It's one type of asset. Now, flooding into any one thing is an issue, but moving from the nominal bonds, in which the government just says, I'll give you this amount of money, and it has the unbelievable and unlimited ability to print the money it gives you, it would favor inflation index bonds. People pay too much attention to one at the extreme of the other, that either somebody's all crypto or they're all gold or they're all something. I believe that that's a challenge. I think that crypto, like gold, is not a productivity earning asset, and it can be controlled by governments in lots of ways. It's been outlawed in a number of places, and it also can be monitored. The privacy element is not secure from governments. And the size of crypto is about the size of Microsoft. It's all crypto combined. And so to be overly concentrated, in my opinion, is a mistake. But to have some of it is a good thing. So the question is always what amount of it. And other things I would say is that geographic location is important. In other words, not just all in US and US dollar assets. I would say that the three things that, again, I'm looking at if I go down countries is first, are they earning more than they're spending? Do they have a good income statement and balance sheet? This is going to be very important in the period ahead because the amount of credit that's going to be available to bridge the gap between spending and earning, cash flows and so on, is going to be quite narrower. So a lot of companies even that were able to raise cash and not have good cash flow because of growth expectations in the future will find it more difficult. That'll be true for individuals. It'll be true for countries. The second is places. How are they working with each other? Is there civility? Or is there civil war, on the brink of civil war? Because countries where they work well together, they're productive, are going to have a real competitive advantage. Orderly places, safe places to be. There are parts in the United States that work better than other parts of the United States. For example, we just had the shooting in New York City on the subway. And New York City's becoming more dangerous. Chicago's becoming more dangerous. San Francisco's becoming more dangerous. You're seeing people leave some places for other places. You're seeing them leave, I don't know, to Texas as Austin or to Florida and so on. So I think you're going to see greater differentiation in places, which affects where you want to be and where people who can afford to be there want to be, and also affects what their economies and markets are like. So are they financially strong? In other words, income more than expenses and good balance sheet? Are they civil with each other? So they're working together rather than hurting each other. And number three is, are they in a position where they're likely to be in a war, or are they likely to be out of a war? You don't want to be in a war. So, and those places, investing wise, history has shown, do worse because they have to spend more money. There's more problems, more pain that's being exchanged. Neutral countries in wars do very well, as it turns out. So elements of diversifications. I would not want to be in debt or cash and those instruments. I would want to diversify well with a bias toward inflation protected assets. And I would want to diversify between locations, countries, in terms of the investment based on the criteria I've just mentioned.